so I'm very interested indeed in what you've been saying, but I guess there are risks attached to it. I mean, can you sort of outline some of the risks as you see them?
I mean, there are risks,
right?
And you invest in property. There are risks of ownership. There is a risk that you can't let it out if you want, if that's what we're trying to do.
Right.
But obviously, those risks can be minimised by picking somewhere where there's a good rental market.
Sure.
Which obviously, that's the fundamental of the whole thing. Is
yes.
You've got to be able to rent it out or sell it. Otherwise, it's a bad investment.
Yes.
Property prices could go down.
Sure.
Which they might well do.
Yes. On that point, can I just sort of stop you there a minute? If the property price goes down, obviously we're joint venture partners. Do you share in that risk of the property going down? I.e., if there's a negative equity, you share in that risk?
Yes.
Fabulous.
Yeah.
Okay, so we are true joint venture partners.
So my objective is exactly the same as yours.
Right. Okay. Okay.
I mean, we could take a decision between us then.
Yes.
Do we want to sell it and just get out before it gets worse, or do we want to just hold on, keep renting it out, which will pay its way, and then sell it at some point?
Sure.
So we can decide between us what we want to do.
So I guess, just thinking it through, the only risk really is that if you get a negative equity situation, and obviously we are looking at a medium to longer term investment here, the only time you'll ever have to realise that risk is on sale. So if we can hold on and keep property, as long as we can rent it out, we're not actually going to have to find any capital to pay back any negative equity.
No. I mean, the only one of the dangers is if interest rates shoot up.
Sure.
Which is a risk.
Yeah, sure.
Doesn't look likely in the short term, but obviously it is a risk, and they will only go one way.
Right.
So we can decide what we want to do at the time.
Right.
As I say, we can fix the mortgages.
Yes.
Which a lot of them are fixed anyway.
Yes.
Or we can decide to sell.
Right. Okay.
Or if you wanted to, you could put a further loan in.
Right.
Which would give a bigger buffer in the joint venture bank account.
Right.
And obviously you get paid that loan back.
Sure.
Eventually when we sell, before any profits are split.
Right. Right.
If we view it's worth holding on to the property.
Sure.
And the other big, well, not big risk, but people ask me if they invest this money, well, you could just disappear.
Yeah.
It's very unlikely to disappear. But also their names are on the land registry documents.
Right.
Often normally it's both of our names on it as a shared property. Right. Sometimes it's just their name for various reasons, or financing reasons, or sometimes it is in their name. So they're the owner.
Yes. Can I just drill down? I mean, if for example I buy a property with a buy-to-let mortgage in my name, and the loan is my name, the liability in the eyes of the bank or the building society is me. Yeah. How do you square the circle in terms of you then getting your name on the deeds of the property, or do you have a separate agreement for that?
We have a separate agreement, a supplemental deed of trust between us.
Okay.
To say that it's either in your name or in my name, but in fact it is a joint venture property as per our joint venture agreement. Right. Which details the risks that we share jointly. Right. Okay. So if it's in just your name, then you could just disappear and deny ever existed.
Yes. So how does that work?
Well, you could do that.
Right.
And I'd have to pursue you, but
I
only work with people I trust who won't do that, and so it's a risk that I'm running. I mean, it's not that's not the case all the time, and often it's in joint names. Yes.
It's a joint name, presumably, where you've got no lending outside finance, and it's actually a cash investment. Would that be the case?
Or quite often we get a joint finance product, so a joint loan or joint buy-to-let mortgage.
Right.
The reason why it's not done always that way is because, for instance, some of the building societies don't allow people to have more than
6 or something.
It's now 3.
Oh, 3, is that right?
3 buy-to-let mortgages, and I've got 23. But with that particular banking group, so I can't get a mortgage with that banking group, a buy-to-let mortgage.
Sure.
I can get mortgages with other companies, but obviously at a lower, sort of 50% mortgage or something.
Sure.
So it's better for us to get a higher mortgage in my partner's name, and then I run a slight risk that they may disappear.
Okay.
But it's generally a trust. It's all based on we trust each other that I've got. You could run off, or but any loans are made into our joint venture bank account,
right?
Of which you're joint signatory as well.
Yes.
And you've got online access. I send you bank statements regularly, so you're monitoring it all the time.
Sure.
So the risk. I mean, we've been running these joint ventures for the last 7 years, I think.
Yeah.
And haven't had any problems so far.
Fabulous.